This is the Recycling, Scrap Metal, Commodities, and Economic Report, March 10th, 2025. U.S. weekly raw steel production fell slightly to 1.64 million tons, down 4.6% from last year and down 1.3% year to date. March 12th steel tariffs already raised steel prices, and production increases should follow. WTI crude oil price fell to $67.04 a barrel. Major news with possible new sanctions on Russia and Iran brings upward price pressure. Increased production by OPEC and lower global economic growth brings downward pressure. U.S. weekly crude oil production rose just slightly to 13.508 million barrels per day, remaining near the record. Lower prices historically mean lower production. The U.S. weekly oil rig count fell to 486, which has been in a tight range now for about 9 months. There's been a slow increase in demand, so there's just minimal production increases. Scrap steel number 1, HMS composite price rose to about $376 a gross ton, but could settle higher. There's been steady U.S. demand, but bad weather hurts supply, and the weaker U.S. dollar is helping lower prices for importers of U.S. scrap. Hot-rolled coil steel price rose to $46.25 per hundredweight, which is $9.25 a ton. This was caused by higher scrap prices and steel mills increasing profit margins. Margin increases happen because of the pending tariffs. Copper price rose to $4.71 a pound. Possible tariffs by U.S. on copper is causing demand to beat the tariffs. Aluminum price rose to $1.22 a pound, which is $26.96 a metric ton. The coming U.S. March 12th tariffs are causing demand to again beat the tariffs. The U.S. Atlanta Federal Reserve GDP Now estimate for Q1 economic growth. It's forecasted to fall to a negative 2.4% growth from a positive 2.3% in Q4 2024. The U.S. Federal Administration is now not ruling out a coming recession. This could be caused by the tariffs that bring increased inflation, also by Doge layoffs. It is believed that this, in the end, will bring faster future growth. U.S. January balance of trade, which is goods and services and has been mostly a deficit. The deficit increased to a negative $131.4 billion, a new record driven by goods, while services are a positive. Imports surged 10% to beat the tariffs, with the new 20% tariffs on China now in place. U.S. February new jobs added rose to 151,000. The three largest areas were healthcare, 52,000, financial services, 21,000, and transportation, 18,000. Manufacturing was a smaller 10,000, while Doge helped reduce federal employment by 10,000. U.S. February unemployment rate rose to 4.1%, which is still a fairly low number. There was only a small Doge effect. Also, companies are dealing with uncertain tariff issues. U.S. February average hourly earnings increased by 4% versus last year. Increases remained higher than inflation for the past approximately 15 months. Wall Street's Dow Jones Industrial Average fell 311 points to 43,530. This was on uncertainty on trade policy and the Federal Reserve saying they are in no hurry to lower interest rates. Also, the Treasury Secretary said last week the economy may go through a period of detox as it moves to more private jobs from government jobs. This is Greg Brown. As always, feel free to call or email me with any questions, and we hope all have a safe and profitable week.